me start by asking Tiku. Tiku, let me start by asking you to respond to the points that I made. Which of the trends that I discussed do you think have had the greatest impact on the insurance industry so far? And which do you think are still nascent?
Carla, I think it depends on the line of business. So if you think about it, data, customer experience, digital centricity, they're already quite mature in the personal lines business, but they're becoming increasingly important and expected in the commercial lines business, especially in small commercial. So, throughout my career, as I mentioned, I've had an opportunity to work across these different lines of business. And I think small commercial is going to get there at a much faster pace than it took personal lines, because personal lines, it's been, decades long journey. But I think if commercial lines sets its ambitions high enough, it can get there faster.
Yeah, they can take a lot of learnings from what has happened in the world of personal lines. Now, John, you tend to focus on commercial lines. Are these trends only impacting small commercial and personal lines? I mean, where do you see the greatest impact being made in commercial lines?
Yeah, I think Tiku's points are right. Personal lines led the charge with digitization, automation, small commercials, following along very quickly. But I think the trends, even if you think about middle market and complex global commercial risks, specialty lines, and so forth, those trends are still important. We're never going to get to straight through processing, but do we want to be more efficient? Do we want to leverage data and analytics to make sharper underwriting decisions? So I think that journey is going to be slightly different. And I know we'll talk about that a little bit as in today's discussion, but I think the trends are the same. It's just how they get deployed and the degree to which they get to an ultimate straight through processing, if that's sort of the ultimate goal, I think will be slightly different across various lines of business.
Sure, and personal lines and small commercial, which are a little bit more template driven, it's easier to use the data to, I'm not going to say replace the underwriter, but to take on many of those underwriting roles. Whereas in commercial, it seems like it's more there to help the underwriter, to provide them with additional resources.
I think that's right. I think in commercial, there's just the complexity is much different. The number of touch points back and forth with brokers, again, never straight through processing, but there's a lot of opportunity to drive efficiency and digitization.
Yeah, well, so that's an interesting question. Let me go back to you, Tiku. When you think about investments in this area, is it more important to focus on digitizing that back end, the connectivity, the straight through processing, the underwriting decisions, focusing on the expense reduction and the efficiency improvements? Or is it more important to digitize the front end, right? Having an easy user interface, data pre-fill, agent enablement, a great UI, or does that change my line of business?
It's a good question. It's an interesting one. And I really think, Carolyn, you got to do both simultaneously. So if you think about where the history of personal lines and the build out of the direct consumer channel, like over 20 years ago, so much of the success came from standardizing data entry. So it shifted data entry from kind of a quote request form that people would mail in to call centers, to websites, to mobile devices. So the evolution has been there. And by standardizing the data and supplementing it over time with third-party data, friction was reduced, quotes became more accurate, and the carriers were able to provide instant bindable quotes, right? So if you think about it, this investment in continuous user experience and standardization really allow these direct carriers to automate most of the underwriting functions and reduce the need for people-based underwriting. Things like rating, binding, renewals, reinstatements, all of those became automated over time. And as companies scaled, the underwriting workforce didn't need to grow at the same pace. So it was a win for customers and it was a win for carriers. And by doing both, we really were able to kind of have it both ways. So in my belief, they've got to do both.
Yeah, and in fact, some of these technologies impact both. I mean, data pre-fill certainly makes it easier for the user, but it also gives you more accurate data that can then be used to help make better decisions and cause that efficiencies. Yeah. John, what technologies do you think are the most important for insurance companies to invest in as they think about their underwriting transformation journey? I mean, where should they be investing? Where are you seeing the greatest return in the work that you're doing with insurance companies?
Well, my sort of silly answer is it depends, but I'll offer a little bit of perspective on this. As we talk to insurance companies across the globe, virtually everybody is in some part of their journey towards transformation. And I'll focus on the underwriting piece, but the same thing's happening in claims, same thing's happening in finance and accounting across the board. But in underwriting, as we talk to folks, their motivation for transformation differ from company to company. And we kind of get three buckets. The first bucket is, well, we need to improve the customer experience. And if we do that, other good things will follow. USAA figured that out. That was their mantra for many years, right? They call it the member experience. And so that, for many carriers, that's their focal point. But for others, they're a little more specific. It might be around efficiency as the second motivating factor. It's very easy when companies know that their expense ratio is not competitive, or they have tremendous growth plans and they don't have the infrastructure in place to scale and continue to be efficient. So that's sort of the second bucket. And the third bucket is really around underwriting and pricing execution. Maybe I've already figured out my workflows, my efficiency, but my underwriters don't have the right tools, whether it's embedded analytics, data, whatever it might be, to be better underwriters and be more efficient in terms of making decisions. So I'll go back to it depends. All of those things are super highly interrelated. But when we talk to folks like chief underwriting officers and we say, what's motivating you? Some will articulate the efficiency. Others will articulate I need to be a sharper underwriter and pricer, even though they're all interrelated.
Yeah, so some of this is highly dependent on your own strategy as a carrier. If your strategy is low price, then you're going to be focusing on efficiency and good decisions. If your strategy is customer centricity, you'll be investing in other kinds of technology.
Yeah, but what's interesting is sometimes the answer is the same answer. It's just how you position it. Sometimes efficiency leads to better customer experience, which now I've also got the ability to pull in data and make better decisions as well. So it's really how you emphasize it.